Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, we're going to take a look at gold ahead of the FOMC rate statement this evening. Now, the Federal Reserve are set to announce their latest rates, and it's likely that they're going to leave things unchanged. However, we don't know what their plan is going forward. There has been talk about potential rate hikes in the future if inflation was to remain above 2% for a sustained period of time. The data out of the US actually hasn't been too bad. It's been a little bit mixed, but it hasn't been too bad. So we could actually see the Fed be a little bit more hawkish in their tone. However, we know how these things go. One comment can just change the whole picture and outlook for the market. So I wanted to take a look at gold and show you the two situations that could happen and kind of talk about the price action that's happening now. And if we take a look at gold, price has already broken through last week's low, taking out this 1869.76 level. It came up, retested, rejected, and we started to move down. However, now we are consolidating within this kind of triangle pattern in here, or this squeeze pattern, after seeing an extended impulse to the downside. So looking at this, if we were looking at it from a technical point of view, we would definitely look more the side of being bearish on gold. The reason why we would be bearish is because of this impulse leg lower, this break below last week's low, and this consolidation, because what we would assume is that price would break to the downside again. Now, this is what could happen if the Fed are hawkish in their tone. If they talk about the fact that they're on the right track and that they could see the rates increase by 2023, I think is what they were talking about before, then we should likely see price break to the downside. And there is a high volume area down here on gold around about 1780 or around about $1,800. That would be an ideal area for price to come down into eventually for those extended potential long opportunities. So if we just go into that weekly time frame and just zoom in, that area is basically this down through here where the price was recently had that sort of pullback through there. So if I go back up into that 4-hour time frame, zoom out a little bit, you can see that it's just this zone through here that I'm talking about. So if price was to potentially break down, what we would almost look for is the break of this trend line through here. And if price was to close below this area today, or we'd see an extended break of these lows, the current weekly low, then we could look for the opportunity for price to continue to trade lower in line with some bullishness on the dollar. However, there are two sides and two coins, two sides to a coin, and if the Fed start to act a little bit more dovish, what could we see? Well, I'd expect price to trade back within last week's price action, and I'd expect maybe a break and retest of the previous week and current week's high at 1869.76. So that's what I'm going to be looking out for on gold going into the FOMC statement this evening. We'll see how this one performs. Either way, there could be a decent trade and opportunity to come on gold. If you're looking for the shorts, wait for the break of the trend line. If the Fed are dovish in their tone, we should see price trade back within last week's price action. Thanks for watching, and I'll catch you soon.